What's up, fam? In today's video, I will be showing you how to properly trade supply and demand and how you can make endless amounts of money in these markets if you just stick to these three things and look for these three things in the market today by the end of this video. So make sure you stay. You will understand and be a master at trading supply and demand, and you will be able to go back to the charts tonight and see where you messed up or did amazing this week and why you did amazing this week in the market. So let's get it. All right, so if we look in here on the charts, what we want to see is we actually want to see three things, right? And I always talk about this in my strategy, right? We always talk about we want to see a sweep of liquidity, a break of supply and demand, and a strong move. Well, I use the higher time frame, and there's two ways to trade supply and demand. You can trade it to enter the markets, and you can trade it to look for points of interest in the market. So I'm going to show you both ways, and I'm going to show you points of interest in the market, and you can take trades from those as well. And then I'm going to show you a few of my trades that I took this week, which made me about $4,000 in the market. I'm going to show you these trades today on the lower time frame where you could just use supply and demand to enter the market, right? So for example, here on the 4 hour, as we can see, we want our sweep of liquidity. So most of the time people will say, well, you want to see a very strong move to the downside. That's a great supply level. And it is. Most of the time you could take a trade from this, but that stop loss is crazy. For me, I'm naturally going to go to the lower time frame. I'm going to take 50% of this area, this range or whatever, or I might just take this wick and treat it as my supply level, because I know that this level within this range, first of all, this only took a low, it didn't take this low out. So people see these levels and they might get a reaction and they think price is going to continue down, but then price turns around and actually takes you out, right? This is not a strong level at all. It didn't do a few of the things that we want to see, and that's why it became that liquidity in the market. So when we're looking, I'm not going to show you guys what we don't want to see, right? But I will give you an example if I see one. I'm going to show you what we do want to see and keep this very simple. So we want to see a sweep of liquidity, right? We want to see a nice sweep. We get that. Once we get that sweep, we have to see some type of break. Now, for example, here, we're within this range right here, this high and this low. So anything that between this low and this high is essentially liquidity until we fall. But you can also look at levels all the time. You can see levels and understand like, hey, well, this is starting to create some type of bearishness. Where are we on the daily time frame? All that kind of stuff. So right now we're bullish, quote unquote, but we are starting to create bearish structure going down, right? So all I'm going to do for my intraday things, points of interest, right? For example, in this point, the reason I got it because it's a beautiful point and it allowed us to get some things is for my points of interest, I want to see a break of demand. So I see demand broke here. Okay, well, this is a level, but that level ends up getting swept, right? I want to see a strong move. These are making new lows, but not really closing below those lows, right? So we get this right here, which is a beautiful sweep of liquidity slightly. And that's what we like to see. We don't want price to spend too much time up here. Once we get that, we get a break immediately, right? This break of demand, this demand entered the market here and it actually broke. So that is the first thing we want to see, right? It's not going to always look like this, but a lot of times you have to let price do what it does. These reactions from this demand, that helps you, right? So when you see those reactions, you know that there was a shift in the market. Buyers and sellers actually fought at those levels and somebody took over and pushed and showed intention in the market. So if we seen a high, then we would say, hey, buyers showed intention there and they're going to create a new high. If we see reactions here, then we break it, then we know that sellers showed intention and they took the lows. So we get that nice sweep, we get a break. Immediately, this is my 4 hour POI, immediately. Now, whether I want to go on the lower time frame and enter, or if I want to go on a lower time frame and enter, or if I want to just simply go on the or just enter from here, it's all dependent on me and my strategy. Me, I don't enter in a 4 hour, but I'm going to show you that this works in a 4 hour. So here you can get, I would target these lows, of course, to be honest with you. So that would be the first target because I would expect us to either continue bullish or go bearish. Or you could take the low hanging fruit, and these wicks right here have some buy-in action in there, so you could exit there or exit at the top of this black candle. It really doesn't matter. That's not the point. You want to see that sweep and then the break. You got a push up here and then it reacted, then it made a new low, quote unquote, but where was the sweep? There was no sweep in that area. Same thing here. For this level here, this level took liquidity of these highs, right? So it swept all this action in here, right? Took it, and then what did it do? Make an abrupt move right down to the bottom. We took out some sort of demand that wanted to enter the market. So once again, demand tried to step in the market, and we flushed them out, all those buyers. So all we do is take the last candle before the big move, we drag it over, and we simply, again, you can enter here. This is fine. If you trade in the 4 hour, you're most likely a swing trader, so it coming back doesn't matter. Put your stops there. Be confident. Give yourself room if you want, but be confident that if price goes above here, we're wrong. And again, we could target these lows because they're becoming weak. We're starting to build liquidity. This is all becoming consolidation on the higher time frame, and we look for an expansion, and that's what we get. Now, again, same thing that happened here. This actually didn't, we swept here, but it didn't take the lows first. So I wouldn't have taken this entry because it's just not what I want. But this entry or this entry would have been primed for this level. And at this point, I would have missed out, and I would have had to be patient and wait for something else to show, right? So that's the supply side. Now on our buy side, again, we want to see some of the same exact things happening, right? We want to show, we can say, hey, demand entered the market, right? Let's find the area where it doesn't work. Oh, demand entered the market. Oh, that's a strong move right here. That's a strong candle. Well, what didn't you take into account with this demand level? You didn't take into account that supply is starting to be in control. If you say, hey, you have to realize, hey, I need demand to show me a little bit more in these markets. I need demand to take out one of these strong highs that's been sweeping liquidity. It's only taking out these highs that's not making new lows. So you have to be able to understand that every big move in the market is not always going to show you, hey, you can trade from those levels. You need those levels that sweep, break, and then you can look to enter. Sweep, break, enter. Sweep, break, enter, right? Simple, very, very simple. Same thing here. This was a strong move in the market, strong move in the market. If you on the supply side and you looking for sells, you would be, let's see. This right here wouldn't be a good sell, but you can't take this sell because we're expecting price to make lower lows. But I wouldn't. Just because I see a big move, I need to see that it swept something. Now, to the left, this candle it didn't sweep anything. This candle, I don't know if it swept, but it did take these lows and then started making a move. But once you see the break of that supply level, you can say, oh, this was obviously a sweep of these lows, maybe a sweep of something to the left, right? As you can see here, we took these lows. So we're snatching liquidity, right? Then we're moving and breaking through. Now we got a reaction, and then we get candles, some rangy candles, and then we see an expansion. That expansion is very important, and those doji candles are very important because those candles show you that price actually reacted. Sellers stepped in the market, tried to take over. They had an equilibrium of price, and then at that equilibrium of prices where buyers and sellers agree, they actually took over the markets, and you see that buyers took over. So in this case, I'm looking at that specific level. This candle here was the beginning of that, or you could take the high of this candle and you could say, I'm going to enter, or this is my point of interest. Let's say we wanted to just enter. Again, we could sit here or we could protect here. Either way, it shouldn't go below this, or we're just wrong. We target the highs, take the liquidity that's rested here, of course, for a target. We got some relative equal highs or trend line liquidity kind of working, and we get snatched. And then on top of that, it allows for a re-entry. Why? Because this candle did what? This candle came down here, bunch of internal liquidity, made a big move, took some lows on the lower time frame, right? You know, not necessarily the strongest lows, but took some lows. And let's see what else we got. We took some lows. And 1 second, guys. Okay. I had to make sure I was recording. Hey, man. I be trying to bring you out of value. But listen. So we took some lows. We come down here, we sweep. Again, this is our entry level before. Let's say we missed it. Hey, we could come back and be confident in this level. Why? 2 reasons. We now have a sweep. We have a strong protected low here. Once it sweeps liquidity, that is a protected level. Once it takes out that supply or demand level, vice versa, that is a protected level. Then when we come make a new high, that is now building a supply or demand chain. In this case, demand chain. So now we're starting to create that here, that chain of demand, the same way this was creating that chain of supply, right? So when price gets to this level, this could either be a POI or it can be an entry point. Let's find our time, 9 o'clock. Let's say we enter down here at 9 o'clock. Yep, because that would be the next candle that we would like. We would enter here. And then again, we target these levels, right? We actually created more liquidity when price returned because we got this action here. So now we know that we got a protected level. We know we got a demand chain. We know we have a demand zone that we can trade from, and we have liquidity to target. So a reason for price to go higher. It's very, very simple. Here's another example of a price sweeping level. So we get a pullback, and we get this supply level that kicked in the market here. We need that supply level broken. That supply level actually breaks. I still won't trade off this because I don't like it, but we are creating what? A demand chain. This demand chain is beautiful, right? So once we create this demand chain, now we can say, hey, price is doing something. I still wouldn't take this trade unless it aligned perfect, which it did with our time. So potentially I would if I watched the 4 hour. So this could be an entry for you. Me personally, I need stronger candles. I need stronger moves, but these are demand levels. They might not look beautiful, but they are demand levels that is creating new higher highs, right? But this demand level here, this candle here does something beautiful. It sweeps, and then it does what? It breaks, right? So now for the future, that is a point of interest for me, and I'm doing this pretty quick, but this is a point of interest for me. We took this supply and we made higher highs. I'm going to map out this demand level for the future, and we do come back to that level again. We got a sweep, a break. We went high. We came back to this level, and again, we could take the trade if we want. If that's something that aligns with your plan, or this could be a point of interest for the future. Maybe you want to see it hit during New York session, and then the next day you look to enter so we can make our higher highs, right? Which we actually ended up doing, right? So this is the beauty of utilizing sweeps of liquidity. Same thing that happened here. We swept these lows, took a high. Price came back to this point right here. It just couldn't make a new high. So then we started to show bearishness, right? Couldn't make a new high, took a low. So now we got that chain. We come to our extreme point right here that made this big move. And then we look to make that new high, right? That's complex structure mixed with supply and demand. Now let's go to some trades that I took this week. And these trades were beautiful. And they were really simple. It was because I understand what supply and demands that I want to trade from. If you don't know by now in this video, we want supply zones that sweep liquidity first. We don't want to be within the sweep or within the manipulation. We want to see the manipulation happen. And if it leaves us, it leaves us. But if it comes back to get us after that manipulation, then we can enjoy the ride up. Sometimes it will sweep liquidity and then you steal the liquidity on the day of news, but most of the time we want to see the manipulation so we don't have to worry about it. My banner behind me says stay patient or get swept. That's because a lot of people want to get in early in these demand and supply zones that they think gonna move. They don't know they're gonna move. The ones that we know are gonna move are these ones on the chart that sweep liquidity. You know, that this one came down, took all this internal liquidity, made a high. We come back to that level and we make a new high. So let's show an example on the 1 hour how you would enter, like truly enter price. And this is a trade that I took. So I actually broke this trade down the other day. But again, we had a supply level here that made a low in the market. The reason we considered this a supply level is because it was a flip. It was a reaction from this demand level. Again, remember what I said, we want to see a movement. We want to see some reactions. We get a bunch of reactions from this level of price right here. So we get candles. That means they were trying to make new highs. They couldn't make new highs. So in doing that, in seeing that, we pushed down lower and then we left liquidity here, of course. Boom. And we actually left it all across. But we left liquidity all across and then we dragged this over. We tagged that level. In tagging that level, we swept this level, which is beautiful. And then we just wait for it to make a new low. And it actually couldn't make a new low immediately, but then eventually did overnight. So this showed me, okay, on the lower time frame, this was a level of supply, and then which tagged into there. Of course, on the 15-minute is a little bit better, but I don't feel like going down to the 15. Actually, we can. Let's do that. Nah, we're not doing it. It's extra. But somewhere in here, it was two levels of supply that tapped into this level, which mitigated that level. So I dragged this over. Again, I need a level that's protected. This is showing me a supply chain. It might not look pretty. I'll go to the 15-minute and show you. It might not look super pretty, but it's what it is. So this supply level I brought to this green candle. We actually tagged that level here, right here. If I drag this over, we started to create some type of chain. I filled in that chain and said, all right, cool. And then I just drag this over. Again, align. These are levels that swept. Even these levels swept this high right here. This level swept this high. This level swept this high and then did what? Took out what? This level of demand. So not only Is it a level that's swept? We want to see it take out demand and show that intention. Overnight, we get down here. We actually leave liquidity right here as well. And then we come up here to our level. We got to respect it because we know if this high is taken, then these are supposed to be protected. If these highs are taken, we could potentially react from here. But based on where we are in the market at the time, we want to target down here. And then we could get that beautiful setup going for us. And then another example of what I did this week in the market is, it was nice. It was nice. Let me show you really quick. This video getting a little open-ended, but we have a supply level here that I wanted. Like, I've been wanting it all week, and I'm like, I'm gonna get this supply level. And I was on a 15-minute for a lot of the week. So we mapped this out, and for me, this supply level really was here. All right, cool. Because it's a imbalance here. We got this candle. This candle started to move. This level did what? Swept liquidity, internal liquidity, and then it broke what? This demand. So I have the two setups for this level. I know what I want from there. Now this level did what? This level of demand. We swept liquidity, even these lows down here. We swept all this internal liquidity. We made a new high, so we took out supply. Cool. And then I'm looking for buys, and I take the buys. Let's see, demand, and then we just target the high. Because we are a counter trend, we want to just target low-hanging fruit. Target the highs. Cool. We're out of there. Nice trade. Then we get it again. So we got a demand chain happening. Oh, well, this is our last point of demand. Maybe we'll have something in there that we like. Drag it over. Well, this level came here at 4 in the morning. I'm not even woke yet, or I'm just waking up. So we sweep the levels, right? We do what? Take out supply again, showing that buyers are still working. We know who's in control fully, but we know in this internal daily action who's in control at the moment, right? So what we see here is a clean setup where we swept liquidity, we made some highs, we come down abruptly. This strong momentum of a move, usually I would enter here, but I was actually in this move because we tapped this larger supply level here, and I was hoping that we would either fall from there. I started to see the wicks. I'm like, okay, buyers can't go higher. So I took sales here. We ended up selling down to this level here, made a couple $100. I think it was like $400 or $500, and then I seen that it held here. So instead of me entering here, because I was on the supply side, I'm like, well, this level should hold. Let's see. Once it held and closed right here, I enter right on this candle, put my stops right here, and then I just targeted these highs. And we went and we just took them easily. You know what I mean? Why? Because we swept, broke, right? It's the same exact thing. And then this trade was the sales I took right here. I got in at the top. I remember this candle was pushing high. I got in when it was around there. It started pushing high. I was a little worried. And then I went for, let me explain why I went for these lows. On the 15-minute, these lows did what? They swept liquidity. Let's go to the 1 hour and see what these lows did. These lows didn't sweep anything on the 1 hour, really. Anything that was important, technically, right? But what did? This buy level that I got in took these lows and it took it strong. That was that extreme point in the discount, right? So somewhere in here, buyers was still here, but this level swept these, but it wasn't, on the 15 it looked nice, here it don't. This looked like pure liquidity to me. So my first target was this. It kept going. I just got out here actually, but it ended up going all the way down here. And then I didn't catch these buys, but again, this is the beauty of utilizing sweeps. Swept, broke, started making a push. We're tapping into all these orders of supply here. That's why you see the back and forth, right? That's how it works. This demand is trying to step in. Supply is showing this is a lot of orders here. We got to fill, give fair value. We get a big push and then potentially a nice buy. If you were waiting for that, if I go to the 15-minute and show you that, it would look a lot more beautiful. Again, we got this candle here before the big move. We get there, tag it beautifully if you wanted to take that trade, and then you could target the low-hanging fruit, which would be this weak high, or you could target all this internal range liquidity, which we have right here, and that's why price flew away. And I missed that trade for the week, but this is how you trade supply and demand, and this is the right way to do it. People do not explain. I can say, oh, I want to trade because this level is a strong move to the upside, or this level is a strong move to the downside. That is important, but it's not as important as having a manipulation or sweep of liquidity, gathering orders, and then breaking a level with intention, right? So that can be strong. That intention doesn't necessarily mean it just flew through that. We want to see reactions from those levels, and then an intentional break from either side of the market, which shows us, hey, they are in control now. So I didn't want to make this video that long, but I hope it does help you guys, and I pray to God you watch the next video, because it's going to be great and showing you how and why we made what we made this week. So stay tuned for that. Make sure you hit the like button, subscribe button, and I'll see y'all.